Guys, what is going on? Welcome back to a live stream. I hope you guys are all having a great and amazing day today. We're going to be kind of talking about some of the stocks, guys, that I am keeping on watch for this upcoming week, quarter, and year. Now, a lot of people have been freaking out, stating that we are due for a possible crash, and I honestly understand kind of where they're coming from. We have super high inflation. Employers are having a hard time finding employees, and anytime you have situations like that, a lot of people get a lot of emotion in the market and everything like that. Given looking at the S&P 500 SPY here, this ETF, we can see over the past year, since the beginning of this year, the stock market has been at a general decline of value, right? It had highs here at about $480 or $478 and slowly has been pretty much stair-stepping its way down, right? It hit lows all the way down here at 417, slowly moved its way back up, hit some resistance at this trend line at 460. And then if we actually look at it over the past couple of weeks, we've seen just these massive sell-offs, right? And anytime we have situations like this, a lot of people like to get worried and freak out. Looking at the daily chart, you can see the past two daily charts have been not very good, just a lot of sell-off in the market. So there's a lot of things that a lot of people can do to kind of prevent a lot of sell-off in their portfolio. The first thing that I always like to do is I always like to make sure I have some cash, right? During a recession, cash is king. The reason why is because if we actually go back and we can go to the 3-year chart here. You can see the last recession we had was this March crash during all the lockdowns and everything, where the general market fell from 328 all the way down to lows here at 212 and pushed its way back up. But the beauty of it is if you guys, continue to invest and just had a long-term outlook, you could be buying all these dips. And that's kind of where cash has a role, is because if you're buying stair-stepping, its way down, when this recovers, which it's done over the past 90 years through all the depressions, recessions, ups and downs in the market, as long as you're just generally investing on a consistent basis, you're going to be successful with it. And holding cash and having cash, what I always do is anytime the market falls like 6 to 7%, I double what I normally will put in. So if we're having sell-off 6-7%, double what you put in, right? If you put $100 a week, put $200 a week and not eat out for that week. Or you know what I mean? Just try to invest more because the ROI is there, right? We can go and look at the 10-year chart, and you can see all these crashes and ups and downs in the markets. If we actually zoom all the way out to like 2008, you can see, right, there was a lot of emotion, a lot of sell-off, and then what happened in a couple years later, right? It's pushing highs, doing very, very well. So as long as you have that long-term outlook, guys, any crash we have will eventually push back. And that's where you just have to be consistent with your investments. What I always like to say is when you start working out, right, do you instantly lose weight and get in shape? Absolutely not, right? It takes time. It takes consistency. The biggest thing is just being consistent with your investments. And if you do that, you will be okay. Now, the second thing that I always like to do other than holding cash is make sure you're diversified, right? Because generally, we will have certain sectors in most recessions that will perform better or worse, right? So if we look at, the latest recession we had was in March, you can see we had this massive sell-off, but there was a ton of stocks during this time that actually didn't fall as much and rebounded a lot quicker. Generally, healthcare did very well this past crash because of the recession, the lockdowns, everything. We had tech that did very, very well because of all the lockdowns. People weren't going out. These technology companies were making a lot of money. And if you're diversified, then you will know kind of what stocks are doing better, worse, and you can probably add some more to the stocks that are doing well. And it's all about understanding that. The second thing I always like to do is make sure you have you're diversified, but also make sure you have some dividend stocks, right? Historically, companies like Johnson & Johnson, J&J, these massive companies that, yes, are a little volatile, but they don't fall as much during a recession than companies like the S&P 500 or the general market, because they pay dividends. Dividend stocks don't fall as much because people are more likely to hold them during a recession because they are counting on cash flow in the form of dividends from these stocks. So I always like to make sure I have a good pool of stocks. I make sure I'm diversified and make sure I'm just generally continuing to invest. That's the biggest thing. Now, answering the question of will we have a crash, right? I don't care what anybody says. No one knows, right? No one has any idea. A recession could happen tomorrow, or it could happen in the next 2, 4, 6 years. No one has any idea, right? And I don't care what you guys see online, what you guys see anywhere, what your friends tell you. You just have to be consistent, because if you spend your whole life thinking there's going to be a crash tomorrow, you're going to miss out on massive amounts of opportunity for your portfolio. So for me, yes, if we have a crash, I make sure I'm well diversified. I have some cash that I'm holding. I have some good dividend stocks, and I'm just generally continuing to invest. For me, crashes I almost look at as an opportunity rather than, a I don't even know how to describe it, like a place where I want to sell all my stocks and stuff. I find it crazy, because imagine if you wanted to buy a coffee, right? Your whole life you wanted to buy a coffee, and let's just say that coffee was $2, and you said, "Oh, I can't get it at $2." Then imagine the next day it comes out and it says this coffee is 50 cents. You're gonna have 50 cents. You're gonna be buying as much coffee as you possibly can. That's the same outlook I have with stocks. That's just a little dumbed down. But some of the stocks, guys, that I think carry a lot of potential for Q2, because we just got out of the first quarter. I honestly believe that Disney. I know a lot of people hate and bash on Disney, but I really think that this one will do very, very well in Q2. I think we have a lot of opportunity for Disney. They own a whole bunch of, they're the media powerhouse. Yes, we had this general sell-off over the past year, but I really believe we'll slowly start seeing some support step in, probably near and around $116 to $100 a share. We'll see some support step in. Now, Disney, for me, great stock. It does have decent earnings. Company does bring in a lot of money. And I generally enjoy their products. I enjoy their movies. And I think that helps, right? And I understand we have that sell-off, and you just have to go at it with that approach of a higher risk, higher reward, and go from there. But the second stock that I think carries a lot of potential that I've been buying over the past, since January, really is Snapchat. Snapchat, for me, yes, we had that general sell-off, but this is a higher risk, higher reward play. Does have some pretty hard support right here at about $28. It hit it several times, and we just get buying pressure near and around there every time. Now, for me, Snapchat's more than just that social media site. They make a lot of money, or they're planning on making a lot of money off this virtual reality, right? Augmented reality, which for me carries a ton of potential. Getting into that metaverse, I really think for me, $29 a share, you can't go wrong with it. Highs at 83. So it's just one that I really think will do very, very well this next quarter. But yeah, the next one here is ticker symbol TSLA. I think everybody is keeping an eye on this one here. We do have that sell-off here just a little bit from its highs, but you can see it did have that tendency to use this 90 moving average line as some support, right? It hit it once, established support, came in and curled right near and around there. So establishing probably like this $1,000 mark is a pretty hard support for Tesla. I think we'll get a little reversal, probably pushing up to, the 1100, possibly 1200 within the next 3 or 4 months. I'm a huge believer in the company. I'm one of the biggest bulls you'll ever meet for Tesla. But definitely one that I am for sure keeping on watch for this next quarter for sure. Obviously, I think there's a lot of opportunity out in the market. We have companies like Facebook that, yes, have been getting slammed, but not like a Q2, Q3 outlook. This one here for me is like 2 to 5 years. because we've just seen this thing get absolutely slammed. Yes, they haven't been doing super good on their EPS, but they still bring in $30.6 billion per quarter, or about 117 per year, billion dollars. So yes, it does have some decent support right here at about 186. Hopefully we can get a little buying pressure, start stepping in. It does look like it's starting to stair step down. I think we'll slowly start seeing some. But yeah, this is like a 2 to 5 year outlook for me. Facebook heavily invested in the metaverse to make a ton of money. They own a ton of products, and the biggest thing with Facebook, guys, is you have to understand, like, just as fast as this thing gone up, it's starting to stair step down, right? And so right now, buying the stock is like buying it all the way back in May of 2017. So all of these profits have been wiped out. So honestly, I think that they will start getting into other things, right? From the metaverse, they own Oculus, and it's just a fun stock that I see some potential in for sure. And going into my last and final one here, I think Apple still carries a lot of potential, as you guys can see. Beautiful upward trend. Looking at it here, you can see it does have some resistance at 176. This one here, I'm dollar cost averaging, of course, just because I think there's so much opportunity still for the stock. A lot of people like to say, oh, it's overvalued. Okay, well, it may be overvalued, but the company brought in $123 billion. That is a lot of money, and I'm a huge believer that the 22-cent dividend is a great way to start compounding your account. It's just a great growth stock. It's historically outperformed the market. And it's just one that I think every portfolio should have a little bit, and one that I'm keeping on watch for this next quarter here. But guys, there's a lot of opportunity out in the market right now. If you have any questions, feel free to ask. I think that the biggest thing is just understanding whether we go through a crash or recession. Just have that long-term outlook on 99% of these stocks, and you'll be successful with it. You just have to understand that and just let it roll. But that is it. Hope you guys enjoyed the live stream. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, stay positive, stay safe out there, and we will